I'm Patrick Langan. I'm a senior investment leader on Partners Group's private infrastructure team based in New York, covering opportunities in infrastructure across the Americas. Partners Group is a global private markets firm based out of Zug, Switzerland, with just over 130 billion of assets under management. Just over 20 billion of that is in infrastructure. We have a global team with a global focus, dividing the world up regionally. With respect to our team in the Americas, I look after our clean power opportunity set, which includes renewable generation, as well as opportunities like we're discussing today in energy efficiency. In our thematic work around the clean power space, energy efficiency really jumped out because any practical path to net zero really includes significant contributions from energy efficiency, potentially requiring it to be a bigger driver of emissions reductions than somewhat more glamorous energy transition opportunities like renewable generation or electrification. As such, we think of it really as an underappreciated opportunity set. A lot of that happens to do with where it occurs. It happens in ceilings, on roofs, behind walls, which doesn't necessarily lend itself quite as well to the ribbon cutting events you see in other parts of the energy transition. You do see, though, with growing corporate sustainability goals and focus on quantitative emissions cutting and the reporting around that, it's really shining a light on the actual benefits and emissions reductions that energy efficiency can provide. And it's making energy efficiency move from being sort of a cost-cutting budget topic that was on the periphery to really a shareholder, board of directors, C-suite level discussion around the most cost-effective ways to reduce emissions and improve the energy mix of the companies. The energy efficiency business has been around for a long time. There's very established business models in the ESCO space around providing project-based upgrades, particularly to large public sector clients. I think what's changed with the focus on sustainability is the interest in energy efficiency in the commercial and industrial or C&I space, where customers are looking for different solutions than maybe what's historically been provided. And one aspect of that is the sort of as a service model, which includes a financing component and allows these customers to get upgraded equipment, reduce their carbon footprint, generate savings without having to spend the CapEx themselves or put the debt on balance sheet. And so in the small C&I sector in particular, we've just seen a desire for more holistic solutions, which as we see more and more solutions that drive efficiency, more opportunities to reduce consumption and even sort of add clean energy behind the meter for these customers, there's been an increasing demand for these broader, more holistic solutions. So our portfolio company, Butterfly, has focused on the smaller end of the market because these customers need those more holistic solutions. We look at the growing opportunity set with behind-the-meter generation, demand response, and things that you can add that in a more wholesome, fulsome contract, you can continue to grow that relationship over time. The focus on quick service restaurants is really about their energy intensity. They use 8 to 10 times as much energy per square foot as a typical office building, which means that small changes to improve efficiency can have big impacts in terms of reducing energy costs, and the payback periods on those upgrades are much quicker than you might have in a building that has less intense energy usage. I think what we've also seen is that the largest corporations tend to have very sophisticated sustainability teams that can focus on energy procurement and efficiency and really optimize to make sure that they are getting the best bang for their buck when it comes to energy transition opportunities and energy spend. Once you get past those largest companies, corporates don't really have those resources to be focusing outside of their core business on the energy side of things. And when you get down to sort of smaller franchisees, they really don't have that ability to focus. So providing those customers with a holistic solution that helps them meet some of the goals that they're feeling from their corporate parents is a really big opportunity set, and one that really excites us about the investment in Butterfly. The energy as a service model really creates a distributed infrastructure project with all the key traditional infrastructure characteristics, such as long-term contracts, predictable cash flows, high barriers to entry that we look for. The difference relative to the large-scale infrastructure projects is really they're much smaller, obviously, and they can be developed on a much shorter timeline. So to execute on this, you're really looking at much higher volume, but you get the benefits of building a much more diversified portfolio. When we think about it as an asset class, it's quite similar to behind the meter solar. When you think of the customer base and the project construct, and Butterfly is even looking at starting to install behind the meter solar at some of their sites. So we think that the similarities between those two business models are starting to really converge. Doing this level of projects requires a pretty heavy technology stack, just because managing thousands of projects per year is a very different task than building a single project over a multi-year process. So what we found is it's really important to have that technology-enabled solution so that you can manage the projects and the various outsourced partners, and also manage the sites themselves and make sure that you're delivering on the performance savings that were underwritten and that the assets are performing just like you would from the asset management perspective of a large renewable generation portfolio. And I think this is a key trend that we're seeing across infrastructure as things move into more distributed opportunity sets. Having that technology support to manage large, diverse portfolios is really a key in building what we like to call next generation infrastructure platforms. Businesses that have the ability to scale and have all of the infrastructure characteristics that we look for, but are really in new emerging areas and can provide new solutions, particularly decentralized solutions for the challenges that corporates and governments are seeing today. And that's what really excites us about this energy efficiency as a service opportunity set.